Welcome to Lesson 8, learning how to set up and read moving averages like the pros. Now, the moving average is a critical part of technical analysis and is probably one of the best methods for looking at historical price action over any specific time period. Mastering the moving averages will not only help you in making trading decisions, but it will also aid in the understanding of many other indicators as well. Mastering the moving average will also help you to risk manage and appropriately decide your risk appetite on trades moving forward as well. So let's start with drawing a moving average on our chart. First thing to do is to click Insert, Indicators, Trend, Moving Average. And we're going to draw a 20 simple moving average at the close. This blue line now plots the 20-day simple moving average. So how do we calculate the price? Well, the price is calculated on the back of a 20 period. So we have, if we go to a daily chart, it will be the historical closing price of the last 20 days. And you have a line plot to show last 20 days close price action, the average price taken across this. It is respective of your time period. So therefore, on a 4-hour chart, for example, this is gold, we have the last 24-hour candle close prices plotted. On the last 1-hour chart, it will be the last 20 hours. Now, as you can see, in trending markets, you have bear runs where the price operates below your simple moving average, and if we go back in time, you have a bull run that goes above your simple moving average. You can see what happens there in trending markets, and your trading style and your risk appetite would dictate which moving average will serve you best. So if we look at different periods, this is a 10-day period. You can see a slight difference here on the daily chart. And then you can simply right-click it by changing it, and then in Edit Indicator, you have a 50-day period, which may be a bit more for your style, and it's up to yourself to experiment and backtest on this. The 10-day may not give you too much. The 20-day may be what you want to analyze current trends. The 50-day would be more of a good benchmark, and then of course the 200-day moving average may be a bit too much for what you want, but still give you a decent indicator as to where the overall trend is going over a longer period of time. Now, you may wonder, why is it that when the moving average is still on the upside, why does the price dip lower or dip below it? Or the opposite for that, whereby the moving average is on the upside, on the downside, why do prices go higher above it? Well, here is where we can try and mitigate that risk. And if we draw in another moving average, so Insert Indicators, Trend, Moving Average, and instead of a simple moving average, we draw an exponential moving average. Obviously, just change the color of that. You can see a different line plot here. That's a bit better. So what we can see is that the EMA gives a bit more weight to recent price action. One may consider the EMA to be a bit more accurate than the SMA, but others who prefer the SMA are probably looking for a bit more of a smoother line plot. As you can see here, the EMA is tends to put a bit more weight onto the recent price action, is a bit more sensitive to that. So again, it's about yourself testing out both moving averages and seeing which one works better for you. So in this short video, we've covered how to set up a moving average, what is a moving average, different periods for moving averages and how to set those, and an exponential and a simple moving average, what the difference is between the two. In the next lesson, we will look at setting up moving average crossovers. Wish you all the best of luck with your trading, and for any questions about this, please feel free to watch the video again or just simply ask us.